Red week for Nasdaq as Nasdaq fell 3.47% last week, but Dow Jones managed to crawl upwards by 0.95% or 413 points for Dow Jones. It's been hard trading lately. Nasdaq been down 3 out of 5 weeks lately, and total it's been down. Only a few companies been able to actually move up in the current environment, but right now Nasdaq is bouncing up from being oversold on the relative strength index, but will face a lot of resistance just above today's level. There will be a lot of quarter results this week, and I will tell you what happened with the 8 buy signals I told you about last week. You're listening to the StockInvest.us podcast, Trading Tips with Jim, and I try to tell you what will happen this week. And what will happen this week will be a lot of quarter results coming out, not so much economic news. The two most important things this week is the Beige Book, delivered by Fed on Wednesday, where we will learn a little bit more about Fed's thinking, and on Friday we will have the unemployment rate, which currently sits around 4% and expected to stay around 4%. While talking about unemployment rate, this number is expected to increase as we move forward, and it will just be natural. I was expecting much more upturn in the unemployment rate last year. I was arguing for that all the time, but it was only going up from 3.6 to 4%. It was up at 4.1 or 4.2 at the highest and fell a little bit back. But the time of excessive spending is over. The US debt is over bloated. It cannot be pushed higher. Over the last 4 years, trillions have been pushed out, especially in growing the governmental side in United States. And these things are now being scrutinized because debt is an issue. It cannot run wild. No matter what you think. We see the same thing across Europe. In a country where, like I live in Lithuania, we had 4 years of really bad inflation, and it is taking a toll. When prices double, it is taking a toll. I think we had 27% in 23 in inflation, and we'll soon know how 24 was. But all of these things come at a point where you have maxed out your credit cards, where you have maxed out everything, and you cannot stimulate the economy more. You have to start cut into something to get into a balance. And these things, I think, my personal opinion is that US will handle 10 times better than Europe. Europe will go through a slow process where over the next 6 to 12 months we need to see a lot of changes, because Europe is in a very huge decline. And we need to see different voices, we need to see different politics, and I think it will force itself as we move forward. The week, as I said, will be some quarter results. Here are some of the quarter results. Plug will be today together with GitLab and Okta. Tomorrow will be a little bit more interesting because we will have Target and Best Buy. These will give you insight into the inflation, which are best seen in consumers consuming products. By the way, as I told you, and I told you before inflation even started, that inflation will go on a rampant upturn. So it did. Now I'm saying that, in my opinion, inflation will go down. And I'm very certain about it. If you look at the 10-year Treasury yield, where the professional put their bet on what will happen with inflation moving forward, it has been falling for the last 4 weeks and currently sitting at 4.23 after being down 4.49% last week. And when this goes down, market usually go up. That was what I was telling over the last 2-3 years. When the 10-year Treasury yield go up, expect markets to be bad. It's a main rule, and it has been working very professional because money has been flowing where they are the most secure, and the 10-year Treasury yield is very high. Of course, you rather put your money there. When it goes low and there is not much to gather from it, you usually put your money where it's a little bit more high risk. and stock market is one of these places. By the way, why I am again increasing my portfolio. You heard me over a few years. I put it all into the market when COVID happened, because I knew that was a super situation when there was total panic in the market. Then selling out slowly, Nasdaq tipped around 19,000-20,000 points. I reduced my portfolios down to 36%, then down to 30%, because I didn't believe there was much more upturn to get from Nasdaq in the short term picture. Again, I am increasing my exposure because I think we are in front of very good times. I rather buy slow and hopefully low and sit and wait, but I think it is a good time. A lot of buy signals are being flashed for different indicators and momentum, but in the overall picture, just looking for each stock, the amount of buy signals is very low, but we know that is when things turn, as I told you last week. On Tuesday, we'll continue with Autosoon, CrowdStrike and Nordstrom. Wednesday will be Marvel and MongoDB with quarter results, while Thursday will be job numbers, of course. Then there will be trade balance, which, by the way, is expected to show that the negative trade balance will be reduced by around 7 billion to minus 91.38 billion. This is the thing that Trump is arguing for, that the trade balance is very negative for the United States. We will see. Thursday you will get numbers showing if these things are continue to moving in the right direction or not. Followed by JD, Costco, Kruger, Macy's, Turo and Big Bear AI. It will be interesting with Big Bear AI and Costco also. Costco, which been a favorite for over many years, can be into some small troubles. We will see. We will follow. Non-big numbers, by the way, quarter results on Friday. So what are we looking at for the week ahead of us? Well, we are looking at a Nasdaq that bounced up from being oversold on the relative strength index. Every time this has happened has been a somewhat okay upturn, but facing a lot of resistance above 19,000 and all the way up to 20,000. It's a huge field of accumulated volume. A lot of people waiting to get out to secure the profit, probably scared. Last week I told you that if Nasdaq doesn't break up but instead breaks down, you will have a huge and rapid fall, which happened. Now we will go up to the baseline of 19,002 maybe, and it should struggle there a little bit. If it breaks up, it will just get back to that sideways trend, because it's been a sideways trend. The longer trend is still upwards. And the buy and the sell signals are as follow. There is 23% buy signals overall over I think 48,000 stocks that we analyze currently. Is 23% giving buy signals. Nasdaq only 10%. This is super low. And as I reminded you last time, when it was 7 was the last time the lowest I ever saw, and that was the best buying opportunity I had. 10, I believe, is also a very good one. New York Stock Exchange 28, while London is at 20, Frankfurt is 38, Tokyo at 32, and Shenzhen China 27, while National Stock Exchange of India is at super low. Only 3% buy signals issued in India. Most of these are on the lower end, indicating potential upside, and that is how you have to play the game. You have to try to figure out what is the next thing and then play accordingly. I told you that I went into gold at 1,600, hitting 3,000. I say that I'm selling in the short-term picture, and so I am out of most of my gold positions. I liquidated between $2,900 and $3,000 per ounce, currently at 2,873. So far I was right, but my argue is that there is less uncertainty in the world. It may seem that there is a lot of uncertainty, but in my opinion it is less, and based on this I think that the need to be securing things into gold will be less. I believe gold will fall down to 2,000. Hard to say if it will be 2,200, 2,300. That's where I will reposition myself into gold, but for short term I think it should go down. as it is quite high, but on the long term it will be a safe, good place to be. Just short term, I want to maybe take out the 10-20% potential, which I think there is in gold. Gold fell by $76 last week. Oil $70, and this is the main argument why inflation should go down, because energy is getting lower and lower, slower and slower, which is, by the way, good. I think that it will just continue this way, and the pressure on inflation should, in my opinion, go down. So for the week ahead of us, I believe that there is a fair chance Nasdaq should push upwards. Actually, I put my bet on Nasdaq pushing upwards. May not happen, because we all see how markets, they usually do as they want, and things can come out of the blue. We can have an increase in the geopolitical situation forcing markets down, but I don't think that will be the case. Europe is just saying the same thing like US said last week, that we need a ceasefire and a peace agreement. Hard to say if they just want to take the credit for something, very hard to say, because they're just repeating United States and what United States has been saying all along. Anyway, I think there is more upside in these things, getting into negotiations, getting into a peace deal, where the focus again will be more on positive things, and cheaper energy will start push back economies like Germany, even France, etc. will see, in my opinion, a good upturn. We will get straight to the buy signals which I mentioned last week, and a short recap. 2 weeks ago I gave you the first set. I told you I'm working on developing new products to easier identify buy signals, and I will share it with you. I will share 8 of these every week. We'll follow them, tell you exactly what it did. And last week was a bust, where only 2 out of 8 companies were able to go green. Nasdaq fell 2.51% that week, but the 8 stocks that I gave fell actually an average 6.16%. Where Ata Inc. was the worst one, falling 15.58% over the week. Normally you cannot do things like this from week to week, because you will take out profit if a stock moves upwards, and many of these stocks went upwards the first few days, then falling by the end of the week. But this is how we'll do it. We'll follow them 1 week over 1 week. Let's make the assumption that we get in on the Monday and we sell. We sell them by the end of the week. Last week I gave you 8 new stocks, and from these 3 out of 8 were able to go in plus. NEO was one of them, up 4.10% for NEO. But we had some real boomers. Weibo was one of them. Weibo was down 13.29%. Bisun down 17%. And Tesla down 15%. Making, for if you got 8 of these stocks, the average return was minus 6.5%. Far worse than the market, which only fell by 3.47%. Nasdaq only fell by 3.47%, while this 8 picks fell by 6.5% in average. More tweaks have been done to improve signal selection, and just so you know, it's very hard to make money in a falling market in general. It's 10 times easier if the market in general is going up, but we don't care about this. We are only looking at the results. This week the following 8 stocks are showing buy signals, and one of them was one that was the buy signal last week. CME Group went up 2.27% last week, still flashing buy signals, currently sitting at $253.88. Then there is a company called Pilgrim Pride, PPC, currently sitting at $54.29, issuing buy signals. We have A to C Smart Technologies, a smaller company there, AZ, 7.59 is the price of the stock, $7.59. Also flashing buy signals. We have Regal Pharmaceuticals, REGL, at $23.11, currently sitting at $23.11. Also flashing buy signals. We have Automatic Data Processing, ADP, flashing buy signals. We have Faro Technologies, FARO, showing buy signals. We have Upco Health, which was flashing buy signals last week and went up 3.49% last week, 1 out of 3 that went up last week. And we have Li Auto flashing buy signals. Li currently at $30.74. So here you have 8 stocks. CME is one ticker, PPC, AZ, REGL, ADP, FARO, and OPK and LI are these companies. I'll repeat them one more time. We have SME Group, we have Pilgrim Pride, we have A to Z Smart Technologies, Regal Pharmaceuticals, Automatic Data Processing, Faro Technologies, and Upco Health, and Li Autos. These are 8 stocks that are flashing buy signals, and we will follow them up and see how it went last week. We were able to increase hit percent last week. Will it finally be a plus in this week? Hard to say, but the system will be tweaked and will get better and better. One thing is left in this week's podcast, and that is the $1,000 challenge, where I'm trying to grow $1,000 as fast as I can. And we have had better days for sure. The $1,000 grew almost up to 3,897 or somewhere around there was the height. Then a few bad mistakes, and now currently sitting at $2,648 after an upturn in NIO last week. But NIO is still at a bust. I bought NIO at 5.10, currently at 463. It was up around 508, I think I saw NIO last week in a rush, but then fell by the end of the week. Currently, as I said, 4.63 with a loss of 9.22% since I bought it. The $1,000 have been doubled and then some, currently at $2,648.28, as I said, but this we wanted to grow much faster and much higher. I will stay in NIO because I believe NIO is very oversold, and I believe anytime it can pop up. Will it be a correct decision? I don't know. You just have to tune in next week to see, because then you will get all the results. Until next week, I hope you will have a fantastic week, a very good week, and I hope that your portfolio will be much greener by the end of the week than in the beginning. My personal opinion is that there's a fair chance for green markets. Until next week, just have a super week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information, you agree and are held liable for your own investment decisions.